All right, it's all about Google today, right, this afternoon. And for the most part, when they've posted their earnings, they have delivered. I mean, big time, right? Let's go back to the first quarter of 2024. Earnings surprises, they beat every time. They have beaten every single time. Revenue surprises, management beat every single time except once, and they barely, less than 1%. And the good news really is that Wall Street's happy with it. It's usually rewarded really nicely. It's only been down three times rather. And here's the thing, the last time they reported to top folks, the stock popped more than 10%. Now, my next guest is a believer. In fact, it's a top holding in his fund. I want to bring in now Joe Tigay, portfolio manager of Rational Equity Armor Fund. Joe, you've got a checklist. We want to go over your checklist of the things that you're looking for tonight, and just maybe an hour and a half or so. Let's start with the cloud engine, because everyone wants to see how well that cloud business is doing, not just for them, but in terms of a proxy for the overall AI trade and all the investments being made.
Thanks for having me, Charles. Yeah, it's wonderful to be here. I am super excited for this report, and top of mind will be their cloud spending or their cloud revenue. Of course, last quarter, just incredible growth we saw out of their cloud. We're expecting that to continue, as this is a company that has been putting their money where their mouth is. I just think incredible capital expenditures. That's the next thing I'll be watching for. But just confirming that a company that is spending 180 billion plus in capex is just phenomenal. And what's more amazing to me is the company is actually net cash flow positive after all of that spending. So it's just a behemoth of a company. Incredible story.
Some people are looking for 200 billion. Would you be surprised if the next new capex number, the capital raise rather number, is 200 billion?
You know, I wouldn't be surprised. You know, last quarter we were also maybe surprised, but they did add on. They were raising a little bit extra money. They were issuing some bonds. They were selling some of their stock. So they were raising some money. So in spite of the fact that they're cash flow positive, they're shoring up their balance sheet just in case they need to spend extra. So and for me, a lot of people are waving their fingers at this capital expenditure, saying, "Hey, there's a chance this isn't all going to flop." But I think they know what they're doing. They've been in this business for a very long time, and this is securing their future. This is securing their moat. They're going to have these servers in place. People will be on them existing.
Let's talk a little bit here. You know, Gemini 3.5 Pro has been a problem, 3 delays. That was one of the things last year that got the stock going. You talk about China's cost myth. I left the H out of China, just an accident, but work with me here. The China cost myth. You know, everyone, as soon as Kimi 3 came out, they're like, oh man, you know, like usual, China is cheaper, it's faster, it's all of this. But you say there's a lot of myth to that.
Oh, yeah, there's a lot to unpack there. You go back to the DeepSeek just a few years ago, just recently, that was just turned out to be a big mirage. That was stolen, of course, from OpenAI. It turned out to be a lot of fake news, but also, I mean, it did spur people to think, hey, maybe these models can be trained cheaper. Maybe they can do that. Alphabet actually has an answer for that. They actually are creating their own chips, which are making these cheaper. And then the next thing you look at and say, oh, well, they're undercutting the cost for Anthropic and OpenAI. Maybe they're not going to need all of these servers, all these data centers. Well, obviously, Alphabet has an answer for that too. They have their own model. But I just think that we're thinking too rigidly on this cost thing. I think it's not going to be something that's going to be here to stay. I remember in the early days of cell phones, I had a cell phone in college, maybe before most people had a cell phone. But if I got a text message, I'd say, hey, what are you texting me for? This is costing me $0.25 every text. Don't you dare text me. And then, you know, 6 months later, texting was just included with the bill, and I get a text and people would say, hey, just upgrade your plan, man. It's going to be free now. And then everybody is just texting as if it's normal. I think that's the model we're going to see. It's going to be a monthly subscription plan where people are going to have a limit of how much they can use on these tokens. And in general, people are more and more people are going to be adapting it, because right now people are scared. Oh, I don't know how much it's going to cost me if I try to do this API thing. It's going to be super expensive. I could end up spending millions of dollars. Well, if there's a monthly fee attached to it, you'll know what you're spending, and more more often than not, they're going to be companies like Anthropic and OpenAI are going to be selling a lot. They're going to be doing a lot better than what they're selling because people won't use their entire limit.
You know, it's interesting. You also talk about the hidden conglomerate optionality, and you know they've got the search business, they've got YouTube, they've got a lot of things that they were independent businesses. They could be hot stocks as well. Joe, you put your money where your mouth is. We'll see in about an hour how right you were, but I love everything you had to say. Thank you.
Thanks for having me.